Yo, what's up, guys? Welcome to DeFi Top Signal. Today, we got Noah Seidman. This guy, he's a G. He's considered the most rational guy in crypto, and he's well known for being that guy who's like, I ain't investing in you unless you pay me. Noah, tell us about yourself, man. Who are you?
That narrative, that statement is the culmination of such a long road of peering through the bullshit. And then, I mean, we jump to the end, the beginning of the story. Everything's good. We're handling this market well, and it's been an interesting ride. And we'll go back as far as you want to go back, but these current market conditions are pretty interesting to talk about.
No, I got you. I got you. So, Noah, or for anyone who doesn't know who you are, what's a quick TLDR? Like, what do you do? Why did you get into crypto? Give us like a little ELI 5 story on you.
Well, software engineering as a career for the last 14 years. So I wasn't not intimidated necessarily of the complexities of what we started to engage with probably back in 16, 17 at this point. And then, I didn't really understand financials until starting in 2020. And I started to see relationships between what was being created in crypto protocols to traditional finance. And then I was just like, oh, I just have to understand traditional finance and I could start to get a sense of what the hell they're building here, why it works, what's going on. And then that is actually what occurred. What they built in the crypto markets is the manifestation and extension of what was built historically by sovereign countries over thousands of years. So I found it very interesting. That was an observation, and it has allowed me to create a story that I could tell other people, but also myself, that helps me understand why the market does what it does, why people build the things they build, and that's really the most immediate history for me. Obviously, there's a whole career I've had in software, but that's kind of the boring part. The more interesting stuff is the recent crypto history.
So you don't have any TradFi background. Yours is mainly just everything crypto.
Software engineering, obviously. I've been Android dev for all this time, but not traditional finance. I guess 16 and 17, I had more interest maybe even in equities. And I liked, as an engineer, institutionally educated in engineering, I took an interest in energy. So back in 16 and 17, no one gave a shit about energy. And nowadays, what Tesla started, it's a whole story it's a tidal wave through society. And what took my fancy back in 16 and 17 was actually battery metals. It was so early. So when you're early, you almost can't tell whether you're just wrong. Being too early is indistinguishable from being wrong. So, so I was early, but I knew I was right, and I couldn't tell whether I was wrong, but I knew I was right because of my engineering. And it turns out it took 2021, 2022 for energy, or at least the things that I chose, to really catch the bid. It took 5-6 years. Man, it was tough being early because you think you're wrong for so many years, and then it's just nice that it played out actually as I thought it would. But maybe 20-30% of the stocks I picked went bankrupt, and literally you log into your brokerage account and there's zero, they're worthless. And then the rest of them are 5, 6, 7, 800, 1,000%. And then just, I know that at this point, take it to 2030 and they'll be 10,000, 20,000%. But it'll be fewer. Maybe 50% of them will be bankrupt by that time. But that's the way it should play out. Now, probably the most interesting thing I could end that part of my history with, is time horizon. That is one of the most interesting things to contemplate nowadays, especially in the
Yeah.
crypto market context, because everyone's like, crypto markets, like literally, there was no financial system in crypto prior to 2020. So we're literally talking about 3 years of history here. So that's a very important consideration when talking about crypto is time horizon.
Yeah, what's interesting you see with these crypto markets and their cycles, it's almost like the regular market cycles, but at a much more rapid pace, like 20, 30x speed. But first, when you were talking about the different stocks you would buy, some would just be completely bankrupt and zero, and then others would be up 3 to 6,000%. That kind of reminds me of like a DigiDart portfolio, to where you just kind of like pick a bunch of different altcoins in different categories, and some of them end up massively outperforming the market, and others get completely wrecked. And hopefully, the ones that not hopefully, but the ones that massively outperform the risk to reward ratio, they pay for the losers. But speaking of early, you've made some really great calls on your channel, and looking at a lot of the um, protocols with a sustainable revenue, or at least something that have a strong revenue stream. How do you evaluate potential investments in the DeFi space, and what are some factors or key factors that you look at when you're making these decisions?
Well, the calculation is relatively simple now. Obviously, historically, it's been a process to get to where I am with how I evaluate things. I want to buy revenue. That's a Maybe that's a weird statement for many folks. I want to buy a salary. So, how much will it cost me to buy $1,000 a week? Is that weird? I guess it's not weird for me. It's not weird for maybe, dividend investors in traditional finance. They're just used to getting shafted with 0.3% per share, or, like a $30 stock that gives $1 a share, or something horrible. But that's that's the perspective that I've most appreciate nowadays. I want to buy $1,000 a week. How much will it cost? Do I have enough? Maybe I do. Holy shit, I do. And that's the calculation. How much money do I need to buy $1,000 a week? So it's kind of redefining what we've always done historically as humans in work and employment. It's also a process of digesting the system and understanding the game that has been created for people in society, and that allows you to, once you see the game, you're able to digest ways to not finagle the rules, but it's just stuff that people don't see, because it's stuff that people would never think to be, oh, I can do that. Because you see the rules and you're like, oh, you can do that. Oh, I could buy a salary. I could buy $1,000 a week. Everyone's like, I got to trade time for money, but what about trading money for time? Um, Maybe just even putting these phrases on our behaviors just helps the people understand what they're actually doing. Because anyone who has a job, your calculation is you are trading 40 hours for money. Okay, trade money for time. How much does 40 hours cost? And so that's flip the script. That's an interesting statement I've said often. If you reverse it, it gives you an interesting perspective. Like, for instance, here's an interesting flip of the script. You go to a store and you see eggs on the shelf. You're not buying those eggs with dollars. That store is buying the dollars from you using eggs. They just put the eggs on the shelf to entice you. The store is like, all right, guys, who's going to come in here? I want to buy some dollars today. And like, oh, you're going to let me buy dollars from you? Here's some eggs. So that's just,
That's interesting.
and that's real though. It's the biggest thing I've learned. Maybe it's wrong to be like, dollars are everything. And one of the first times I realized that was trying to understand foreign currencies. If you're outside of the US and you have a bank account full of euros and you want to buy eggs in a convenience store in the US that are someone wants to sell them for dollars, you first have to buy dollars. To skip over that whole credit card, auto conversion thing. Let's say, you have €5 in your wallet, paper euro bill. You literally have to find somewhere where you could buy about $5. First buy the dollars, and then you could go to the store. People don't think in terms of dollars as something you have to buy. And that was probably one of the biggest realizations I've had over the years.
Yeah, I think I heard on a podcast. I can't remember where I heard it, but they also further push that narrative of don't think of dollars like a dollar value. Consider it like a time. So like you're trading your time or you're selling your time for different assets, and you can use it to determine, hey, is this asset that I'm buying worth the amount of time that I spend? I mean, for some, an hour can earn them $10, $20, $30, and others it could be millions of dollars. And it's just an interesting perspective to look at.
So,
Well,
say Noah, I have a quick question about what your analysis, when it comes to investing in certain markets. Are you focusing primarily on crypto, or is it like kind of secondary at that point, or are you into bonds? Are you into mainly equities? Where are you kind of
Crypto is the
putting?
most productive enterprise I see an opportunity in right now. When reducing the calculation to how much money can I buy at what price.
Mhm.
This is by definition venture capitalism. Venture capitalist is looking for 30% of their money over 3 years by giving an entrepreneur X amount of dollars. So that is a great place to start. Thinking about investing is literally to look up venture capitalism. And nowadays it's literally just go on ChatGPT and start asking questions. Um, so crypto offers some of the best enterprise opportunity I could think of it. Where I'm not going to get it from equities. I'm not interested in some small cap equity that's in the billions of dollars of valuation, because those P's and E's on equities are just useless. It's uninvestable, in my opinion, the vast majority of the entire United States stock market. I often call it overpriced pig shit. It doesn't make any sense. You can't get the cash flow that makes investment sense. Yeah, so it's the crypto markets for me, but you can't own just one thing. You need to hedge, and I think exposure to other things is critical.
Absolutely,
what do
and
you,
I was just, are you looking at the heavy correlation between the Dow and then the Nasdaq and then the DXY, right? Are you looking into those as well as you make your investments within crypto?
There's correlations and inverse correlations everywhere.
Hmm.
Um, so the DXY is an interesting beast because in many regards it's artificial. It's relative central bank policy. That's literally the dollar, the DXY. So it doesn't give you as much information as most people think. Generally speaking, you see inverse correlation between risk markets and the dollar, but risk markets in what country? So the most informative thing I've observed over the years is everything's connected by liquidity. Liquidity means cash, dollars available to invest. So that's why you see the correlation between the Fed balance sheet and markets, risk markets, US risk markets. But that equation changes when you start to think of an entire world. And you start to think of the German stock market or British markets or Australian markets or whatever, Japanese markets or crypto markets, because crypto markets are not a US market. crypto markets are not a British market. Crypto markets are not a Japanese market or an Australian market or a market of any country. It's a country without a country. That's real. So there is correlation between the crypto markets and other markets vis-a-vis a common denominator, which is liquidity. And liquidity, that's the important thing to understand. And liquidity conditions of a specific market and the relative flow of liquidity between markets. So that's the DXY. DXY gives you insight into relative liquidity conditions outside of the US. How about that one?
Got it. So you look at the Dixie and you're determining you think there's going to be a relative weakness in it. So you see emerging markets doing extremely well.
Ah,
And you consider crypto as an emerging market, which I do as well, where the destination is, well, or the IP is the internet. There is
right.
no individual destination. And like your Phantom, your Optimism, your Ethereum, these are all different countries inside this little world we call the internet.
Emerging market of emerging markets with different, obviously, risk profiles and countless considerations.
Yeah. No, that's interesting. That's interesting. So I guess I want to caveat into what projects are you looking at right now, and what are some examples of these um, buying revenue streams are you looking at, and what determines that, hey, look, this protocol is one that I'm going to choose as my golden goose to lay my golden egg, whereas another one is like, nah, bro, not so much. Because sometimes when you go into DeFi, you can see a protocol is paying you like, let's say, 1,000% APY, and between me and you, we all know that's not sustainable. Who knows, that APY could be zero in like 3 days because it's denominated in that token. The team may decide to rug pull, or the LPs just withdraw. I mean, it's just, what do you look at? What do you determine, and how do you what is your benchmark, and what is your checklist that you use to say this is it?
A good direction to head. First and foremost, it's imperative to understand that financial markets are a manifestation of biological markets. What do I mean by that? A predator and prey. Every single person out there is trying to take your money, period, which means you need to do less rather than more. You need to know where your capital is going and why it's going there. It needs to be going there for a goddamn good reason, because someone's going to try and take your money. And this has nothing to do with crypto markets. This is the equity markets. This is walking with cash in your pocket to the supermarket. Someone's going to probably try and take your money at some point. If it's obviously much more predatorial in financial markets rather than the cash in the pocket analogy. You got law enforcement and social norms in play there. But in financial markets, that's it. That's the name of the game. Capital gains, price going up, that by definition is someone taking your money when the price of something goes up and you bought it and the price of the asset just went down because someone took your money.
Right.
So point being, there's very few investable things in the entire crypto space. And then part of that equation is diversification versus concentration. You can only reach your goals with oversized concentrated bets. That's like Buffett's type of narrative he'll talk about. So I'm an advocate of the core of a portfolio being that oversized concentrated bet, and then having marginal periphery positions where it's more speculative. So you need to find the shining star that you're going to hang your hat on, and it's either going to hit or it's not, and that's okay, because if it doesn't, that's why we work. And then you find another shining star to replace that core portfolio pick. So the periphery is the things and this goes in confidence order. So you need to exercise due diligence, and that takes time. It could take months. It could take a year. Take 2 years. It could take however much time it needs to take. But that's how you structure the portfolio. So I guess I'm trying to head down the road of thinking of a good example. Like there's this great outperformers like Velodrome on Optimism is just doing very well. I didn't expect it to do as well as it's doing, and it continuing to do well surprises me because there's such little liquidity and optimism. Its market cap is almost 10% of optimism, of all the liquidity and optimism. I think it's running around a 40 mil market cap right now with there's like 650 mil of liquidity and optimism. So I find that fascinating.
Yeah,
So I
it's
can't,
got a lot of the TVL. It's got like 30 or 40% of it. It's crazy.
is that wild? So, but I don't, why don't I want a position? It's the damn liquidity and optimism that drives me away. I don't find that interesting. I'm worried. It's not that I'm worried, but I don't like the OP token. It's worthless. It doesn't do anything. No one cares about governance. People care about governing things that will make them money. They need to govern things for a reason. So governance on the direction of the network. Nobody really cares about that.
So can I give
Um,
you a thesis behind the OP token? Me also, I'm not extremely bullish on it as well. But this is a random thesis I've just been thinking about it, and
sure.
I want to run it across you to see what you think. Okay, I know you're a bullish candidate for Curve, right?
Hmm.
So how I look at the OP token is like its own Curve token, whereas Coinbase chain is just an example of the iteration of the narrative having their own base chain. If you look into the details on how base chain is going to work, being that it's using the Optimism tech stack, a
Sure.
portion of the transaction revenue is actually going to go to the Optimism Foundation, which is similar to something like Curve, to where a portion of those yields actually go into the Optimism Foundation. Well, actually, the portion of the yields in Curve go to Curve and the Curve stakers and holders. But
Ah,
Optimism then is getting that additional revenue and can use it to incentivize liquidity and incentivize more transactions and incentivize people to use the Optimism chain, which also goes to benefit the Optimism Foundation because remember, they get that revenue that's happening on chain. So they're
yeah,
using this OP token as a incentive to uh, motivate or give a
sure.
motivation to do certain actions.
Makes perfect sense. And that is a good observation. From an investment standpoint, it pays you nothing on Friday.
Good point. Good,
It
yeah.
in, so the simplest thing for me is that completely invalidates it as anything even remotely interesting. So
What is the
that's the
speculation on bribes though? Like you got Coinbase. Well, I mean, I think it's too centralized to be able to make a narrative like that.
but you can't speculate in that, but that sounds like it's out on the margins of a speculation. The most interesting thing is something that pays you currently on Friday, and you're speculating that it will pay you more on Friday in the future because it's currently paying. And now it's just the narrative continuing to exist for years to come. It's very hard to speculate if something is not currently paying then it's, that's much further out on the is it ever going to pay spectrum. Um,
That's a good point. That's like stocks. Stocks that'll pay or just started paying dividends and they're like 20-30%. And then just randomly one day they're like, nah, bro, we're cutting our dividend rate.
yeah.
I guess Curve would be like a Coke where it's like, hey, look, our dividends are 2%. We plan on increasing it every year, so chill with us. That makes sense.
Well, bear in mind, then the dividends are. So what interests me most about Curve, it's more than what you just described. Why? You said we're planning on increasing it every year. The speculation is that Coke would make more money every year and give more dividends every year. It's a whole nother level with an immutable software contract. It's not a board, the Coca-Cola board saying, okay, we made X amount of dollars, all the people are paid, all our bills are paid, we're going to increase dividends for fiscal year 2023. The software contract will do what it's going to do unquestionably, time and time again, rinse, repeat, deterministically. That is an enterprise that has a board of robots that will do what it's going to do no matter what over and over again. Changes the whole equation with regard to due diligence and like that's the most important thing, to understand who's on the board of a company you're buying. Now, obviously, we're not going to turn the show into an exercise of due diligence. I mean, who buys a stock looking at who buys Apple shares looking at who's on the board of Apple, what have they been voting on, what have they been doing? Nobody does that. So in crypto, for few protocols, it obviates or just removes that need for due diligence. There is no board. The contract is written, it's deployed, and will continue to execute unquestionably. That's why deterministic, immutable contracts are probably one of the most interesting things for me.
Like that, the comment on the optimism ecosystem. I believe there's a small party. It's minority.
Abs, you're a little staticky, man.
Oh no. How's it now?
A little bit. It's a little bit staticky.
Okay.
That's a little bit better right there. Stay there.
Okay. Yep, I'll stay right here. So I have a quick comment about the optimism ecosystem. So there's a minority, a small percentage of folks on optimism that is really just using the knowing the fact that optimism every few months or so, a handful of months, 3-4 months, there is an airdrop, right, for the OP tokens, and typically what happens is they'll just dump that for USDC, USDT. Knowing that fact, I think that's why the TVL is where it's at. It's no diss to the popularity of Velodrome. There's no diss to the the protocols that's within the ecosystem. It's just, I think there's airdrop farmers that are within the ecosystem, and that's completely fair, right? That's part of the game. But that's something to kind of take note, because that's something that I've realized in just kind of looking at the TVL.
Yeah,
Yeah.
I love to eliminate things to look at, and I eliminate things really quickly.
Mhm.
I have no interest in that. I have no interest in a network that's $650 million when there's a Arbitrum is $1.6 billion, and I have no interest in a network of $1.6 billion when there's a network of $40 billion. So look for things to invalidate something to look at, and revenue, potential appreciation, potential hype, and even money on a Friday shouldn't prevent you from invalidating things. You're going to see great protocols, like look at Velodrome. It's doing really well, and I have a high opinion of what they've been doing. And so that, that's definitely a good of good praise. But I invalidate it as even a consideration for other reasons.
Yeah, and I
Yeah.
do. And if you want to talk about optimism, Drake, yeah, feel free. I just wanted to ask about Avalanche.
Oh, I was just going to make one comment on
Hmm.
Velodrome, then go ahead and go into Avalanche. I
Yep.
was going to say, in my opinion, the reason for the success of Velodrome, you probably already know this, Noah, and most DeFi farmers will know this. The farms depend on the price of the token because the APRs are denominated in that most of the time. There are some cases where you have Curve that gives out bribes and whatnot and to subsidize that, but for a vast majority of these protocols, they're all depending on their token to hold up well in price. And Velodrome has been able to do that with the OP token incentives. You can tell and see this by looking at the price of their locked VE Velo NFT tokens on their NFT marketplace. They usually sell at like a 50 to probably about a 50% discount. Whereas something like Equalizer on Phantom, they sell for a premium, which is kind of crazy. What they do, that's how fast they go. The ones that sell for a discount are rapidly bought up. Same thing with Thena on Binance Smart Chain. Not really Sliz. But Thena and Equalizer, the other two large solidly or VE33 forks, they also have NFTs that sell at a premium or basically at par with the price of that. And that's because of the demand they have for the NFT. The difference between Velodrome and theirs is that when people lock, the Optimism Foundation is giving tokens to Velodrome, and Velodrome is giving tokens to users who lock their tokens. And that's why it's selling at a discount, because people will come in and throw tokens in, grab the OP tokens, and sell the NFT. So you're getting this flooded NFT marketplace to where the sell pressure is actually going into the NFT marketplace, and the sell pressure is not on the Velo token directly. And you can tell by looking at the charts on the Velo token price, it's extremely volatile at times. Like, it's because there is not a massive amount of liquidity, because most of the token liquidity is going into these NFTs, and that's not liquidity. It's just staking it. It's a Ponzi game, as long as you understand that. But I think it's really interesting how they're able to leverage the OP token to their advantage.
See, I have no interest in any of that shit. Maybe I have interest in everything you just described with regard to understanding it, but I would have no interest in being exposed to that from an allocation standpoint.
But what's interesting is their bribes are constantly increasing. Like this
Yep. That's
past
why it's doing
epoch,
well.
yeah, this past epoch, it was almost $1 million throughout
Yep.
all the LPs. And
So,
I think it might get into the situation to where it actually fakes it till it makes it. And I think it will
it's
make it.
already doing it. It's doing it
It's
already.
making it. It's doing
But what
well.
does it teach us? It taught us something very big, and it's not that it taught us, it further just reinforces something that we've observed starting with Curve and when it launched. And I didn't define these systems the way I do now back then, but we've gotten to this point where I can define them the way I do. These are currency recyclers, and they have overtones of what countries have done with economies throughout history. And all of these systems are completely dependent on third-party capital to finance the recycling of currency. And that's the observation to be had, and that's why it's exactly what we see with Velodrome. The reason Velo is doing well, the Velo token, is because, aside from the complexities of OP's price point, it's because of the weekly revenue that third parties, yeah, sure, obviously a good part of that is OP, but third parties are paying every week for VE votes. That's the systemic driver of all the protocols, all the VE33 forks, and anything that's comparable.
Yeah. Yeah, they're like the water cooler of the chain. Protocols are incentivized to do this because they first A, get cheap liquidity, and B, they also get free marketing, because almost everyone on Optimism has their eyes on Velodrome. They're looking to farm. They look there, they see a random token they've never seen, bribing like $10,000. What is this token? They go look into it. Free marketing, cheap liquidity, sauce.
Yeah, it's getting that L2. It has that L2 vibe to me, and I don't want exposure to small
You're
capital.
a
Yeah,
whale. You're a whale. You're not a small shrimp like us. Or
nah, I'm not.
at least like me.
I'm a little dolphin. I know whales, and they think even more different. So whales are fascinating psychology. So that's one of the most important things to understand. You have to understand your size. You have to understand what that means relative to the way larger actors think about these markets. Look, you just dug into the flows of Optimism and Velodrome specifically. That's critical. What does someone with $10 million think? What would they be doing? How would they be playing that field? So you're not going to have someone with $100 million on Optimism, but you can have someone with a couple $1 million saying, "I'm just going to take everyone's money." How are they going to do it? Can you even navigate Optimism with 10 grand, 5 grand, $500, considering someone with $1 million is running around capitalizing?
Dude, this is
Uh,
this is like a ZK snark technology. You can tell how much someone has in their net worth by listening to what they talk about and what chains they look at. If you think about it.
well said. I mean, look, Optimism is small. Arbitrum technically is small. Mainnet is and frankly, transaction fees are a big part of that calculation. Mainnet. My wife is calling. I think she wants me to open the door. I'll be right back. Sorry.
All right, no, you're good. You're good. Abs will jump on Avalanche when you're done with that thought too. My bad for the caveat.
No worries. I mean, it's actually really, really good to just dive deep into VE33 forks, and it's just interesting to know that how the money flows in and out of that, right? And how people are capitalizing. So, given his thoughts, I think that 300 TVL and just Velodrome alone in an ecosystem that is almost a billion, basically 31% dominance of Velodrome. It does say a lot, and it does say, it speaks a lot of the ecosystem, and it does speak a lot about the Velodrome dominance on how that's so successful. And if people are looking at this, they can determine for themselves once they look, do a deeper dive with Velodrome and understanding the tokenomics behind it. It makes complete sense.
Yeah. Also, your
So,
ups. Oh, sorry.
so he did a good job with Velo. It was the quickest fork of the original Solidly to fix some of the original V1, all the original V1 issues, and he got it up and running. Now, we could dig into like what Solidly originally was, because there probably is a decent opportunity for someone that's not me. I invalidate almost all the Solidly forks at this point, which is unfortunate because I have a very high opinion of what Andre originally talked about in his documentation, and then it just got even more complicated with the mainnet release, and which once again does it wrong in my opinion. And then the stuff on the L2s is doing it right, but look, there's no opportunity for me in Velodrome. It's too big. Fine, if you could get it at 2 cents, that's the most important thing. Can you get it at a good price? And if you can't, it's done. You can't waste your time. Someone's going to take your money. Because why? Because that's what someone's there to do. It's there to take your money. So this is part of my invalidation process. The other forks on the is it Thana and what are the other forks?
Equalizer on Phantom.
Equalizer. Phantom's another story. That's even smaller of a network. Let's take a look at how much liquidity is on Phantom.
For like 400
Optimism.
mil TVL.
Optimism has 687. Phantom 400 mil. It's micro. But look what it's really Arbitrum could be interesting. What's on Arbitrum, Thana?
A question. How do you see Thanos on Binance Smart Chain? How do you see 600 mil TVL on Optimism? I see
Yeah, I'm
900.
seeing
Are you
900.
going by the stables?
Yeah, liquidity,
Oh,
not
interesting.
TVL.
That's interesting. So Binance Smart Chain technically has 6 billion in liquidity instead of 4.7?
Binance Smart Chain has 644 bill in liquidity. Yes.
Oh, I thought that just meant like, yeah, I did see that yesterday, and I really didn't put two and two together on that. So ETH technically has 76 bill in stables now. They've been juicing this past month.
So there's all the opportunity. That's it. But frankly, Binance Smart Chain, considering the total liquidity, I invalidate it because of I want no exposure to Binance, and that's it. Period. Minus 8.2% for the week. Look at that volatility and liquidity. That means someone capitalized. Someone
Where do
made
you
a
see
lot of
minus 8.2?
change over 7-day. The second box. Here, screenshot.
Just cogging around looking at it. Yeah, I don't, maybe I might be looking at evac. Oh, yeah, I see 1 day change on Binance Smart Chain down 7%, 7.7.
Yeah, that's big change in liquidity.
That is it's huge.
We started to see Velodrome really fly when we saw 10 if you look at the history, there's some big spikes, 20 mil in a day. But bear in mind, on March 11th, there was a $33 million exit flow out of optimism. Someone made a lot of money and took it off chain. You start to see significant outperformance when the liquidity increases for the same reason folks look to the Fed balance sheet.
So
Systemic
you look at
liquidity.
stables instead of TVL.
I don't.
That shows you the liquidity on the chain.
Yeah, TVL doesn't mean much. Stables means everything. To
Gotcha.
give broadest perspective.
Interesting. Thank you. Quick tip.
Yeah, that's
Indeed.
awesome. Yeah, so I was going to bring up Avalanche, but I really wanted to touch upon Arbitrum. What are your thoughts with this airdrop? Do you think that this is a huge contender to? I mean, it's already surpassed Optimism, and I know you don't want to talk about TVL, but the metric of that is much higher than it is of Optimism at this point. But what are your thoughts on the ecosystem? What are your thoughts on Arbitrum airdrop, the price, and the opportunities there?
Well, as with OP, I could care less about the airdrop. Care less about the price point other than can I sell it and just get rid of it. It's useless from a value investor mindset. It's interesting from a Velodrome perspective, meaning they could just incentivize the shit out of everything. Which, what happens if there's 20 grand on LPs floating around everywhere on the chains? What the hell's the V33 on Arbitrum? Like I can't.
There's one Sliz, there's another one called XCal, and there's another, I wouldn't consider Cyberswap one, no. There's one other one that just launched yesterday called Ramses. Ramses is actually doing
Oh,
well.
Ramses.
You know Ramses,
Ramses.
they're a fork off solidly.
Well, it was the Monolith boys.
Yeah, those
That can actually
boys,
do well. You
dogs.
see, what worries me about. Okay, so mainnet solidly is done for me because of one, they went
Roosh.
for. Yeah, partially, but more so because they focused on transaction fees, and I don't think they're really getting that it's all about third party vote rentals. That's everything, and also vested interest. So if I can't buy a position size that's not it's reasonable, like can I own a good part of the portfolio or the protocol? Or am I literally just nothing and someone owns 20% of the entire protocol? The person who you just mentioned, and that's fine for him, and that's okay. And but I don't want to participate in something that it has excessive vested interest. So Ramses is interesting. Maybe I'll look at it. But then again, I don't have enough capital to really take a position size I likely want. So that's first and
There's probably
foremost.
not enough liquidity for you. It's only got like
Uh,
a mil in liquidity.
yeah, but yeah, which means you take a $20,000 position, you're not going to be able to own. You're going to be taking a hit on slippage. You're going to be either.
That's what I was meaning. Your slip is
Yeah,
going to be rough.
And then who has the tokens that didn't even have to buy them through an LP position, and they just have an excessive quantity, and you're going to be buying them through an LP, taking slippage to compete with someone that has 10 times the amount that you have, and they didn't even get exposure to the slippage. They just have it. No, I don't want to play those games. It's not reasonable. So it's very hard. That should be the base case thinking about taking positions. It's very hard to take a position, and it shouldn't be taken lightly. Yeah.
I got to make a comment on one of these. The recent USDC DPEG
Mm.
with stablecoins. One of my favorite CDP stablecoins is My Finance, and I know you've talked about it a couple times. My Finance cheat
Oh
out
yeah.
on your channel before. I'm a big proponent for them as well. Like I like their CDP model so much better because they, in my opinion, they have the least exposure to USDC. In fact, they have no direct exposure. The closest one or closest exposure they have is through DAI, But being that it's operated as a CDP vault, it doesn't matter if USDC depegs or not. If that DAI becomes
Oh,
under a certain price, the vault's liquidated and their stablecoin stays properly collateralized. What are your thoughts on QDAO?
I'm happy I have it. It's not outperforming. It's not very productive. I bought it at a time when I think a little bit different. And if I thought the way I do now, I probably wouldn't own it. So I'm happy I bought it when I did. It sits. It will continue to sit. I lock my tokens. I'm a big fan of thinking of VE positions as purchases rather than value. So, I literally, if I looked at my portfolio, I got nothing because anything that's VE has no value. You can't sell it. So you write it off.
I think they have the beefy one, but you take on smart contract risk.
Yeah, Beefy is quite time tested at this point. High opinion of what they've built. They've had zero issues, period, which is pretty cool. But bear in mind that's also LP versus just a locked was it Chi lock QI.
Yeah, they have beefy cheat. It's almost like the vote lock convex, or not vote lock convex, vote
Oh, they
lock
built
curve with
something.
convex. Yeah.
Maybe. It's not that productive, and it's for me it's depreciated significantly. It reminds me of obviously Abracadabra for obvious reasons.
Yeah.
Kind of wish I had an Abra position, but nowadays I invalidate so easily. Like I have a high opinion of Abracadabra. I like what they've built, always did. Aside from all the drama, I think it's the CDPs and the concept of crypto Eurodollars is very meaningful, systemically significant. But it's just, I really think in terms of cash flow cost averaging nowadays, and that simplifies the entire equation. I just want to buy X amount of dollars weekly.
Yeah, that makes sense. So do
Simplify.
you still like QDAO or not so
Yes.
much anymore?
I wish
So
it was
I gotta
productive.
ask this question though. Have you bought any recently, or have you
No.
been buying the past few months?
Cheat out now.
Oh, okay. I was gonna say because I've been farming the mess out of it, and I like them too. I just hold it and keep it and just farm and accumulate. But I've seen like I don't know, it was last month and 2 months before they just have these mega candles. Like it'll go up 100% just out of random, just
Yeah,
one
she's done
day.
so.
And then I'm like, there's someone accumulating this. I know Noah's talked about it. It's got to be him.
Yeah, it could be a big thing. We don't know where the L2s are going to go. We don't even know if the L2s have significance, but I'm inclined to think they do. I'm inclined to think mainnet uh, gets very much isolated to very large actors, where $5,000 transaction fees become marginal. Um, and L2s would be like the population, retail. So there's a place significantly for Qidao, and I think Abracadabra still has significance in the future. I don't pay as much attention as I probably should to the L2s, which is again why I'm happy I have the Qidao position. What else do I have on L2s? Really? Oh, I have some Stargate on Avalanche. That's about it. Sales, synthetics, marginal positions. That's about it. Nothing else significant. Some old GMX, ESGMX.
Got it.
You
Got
gotta
it.
follow the liquidity. That's where all the opportunity is. Right now, folks are like they're looking for outperformance in a market that has been drained of liquidity. If you go to the all tab on stables, it's collapsed compared to where it was in 21. So this is not a time to expect something to significantly appreciate. This is a time to expect depreciation still, all things considered from a macro perspective. Um, there's a time when up only is the case, and that's not now.
Yeah, in the past few episodes, we've been talking about basically the macro kind of just, how to navigate through that. And I think this, we said it, Drake. It's really just DCAing. If you're in it for the long haul, like most of us are, find your favorite farms, trust them, and just let it go and start just slowly accumulate over time. If you are a shrimp or small potatoes like us, that's probably the best bet. And then right when you start, getting the more liquidity added and injected into the market here, then that's the potential for some nice gains.
So you talk an interesting perspective, which I guess the phrase is I have the luxury to not have to entertain nowadays, and because I've been through what I've been through. But I think DCA is reasonable. So then the question becomes, or heads down the road of a lot of things I do talk about. What are you DCAing? What positions do you invalidate? And you still want to be concentrated. And the goal becomes weekly cash flow rather than what is your weekly cash flow, what can be your weekly cash flow speculatively in the coming years. If you're DCAing LP positions that are productive and you're just compounding, and that is a consideration. It is the hardest thing in the world to get. Munger said it. Get your first 100 grand is one of the hardest things ever. So the vast majority of retail and small actors, the odds are immeasurably against them. So that makes it all that more critical to be extremely picky and extremely concentrated rather than excessively diversified. It's so much easier to make money with money. It's a strange reality to financials.
So with that comment in mind, for the viewers, what is your I don't want to say advice, but what are some tips for them to make their first 100 grand? Is it in crypto, or is it get a job, get it done?
Well, if you could save up the money from work, that is the most predictable way to get it. You're trading time for money. Cut your bills, sell the car, sell it for a cheap car, move in with 3 people. Munger said it. Everyone said it. All the crazy American oligarchs say the same thing. You do what you have to do. You take the damn bus. You eat 1 meal a day, ramen, $1. You drink tap water. It's kind of like
Tap water.
not no Poland Spring bottles. You do what you have to do. And it's like, I say that from a perspective, like, it's a fight, and this is existential. Life's on the line. Either you do it or you don't. And that's probably, I think that's good encouragement. I'm thinking of my daughters and stuff, and pull your shit together and you do what you have to do, because either it's binary. You either succeed or you don't. And that is so you get that routine in order, where you are not spending all the money you make. That's the first and foremost. If you're making 30, 40, 50 grand a year, you cannot spend all the money you make. And I know the prevailing narrative, the inflation and the complexity with all that in mind, but the first goal is to spend less than you make, and you do what is necessary. Munger said it, you walk where you need to go if you need to. If you need to walk an hour and a half a day to work, that's what you do to save an extra $500 a week. And that's crazy, and that's gonna frickin' suck. And I'm just, nowadays not fan of American exceptionalism. Not fan of entitlement. I've had exposure over the last couple of years with charities in other countries, and that's just the perspective that most are not aware of what the war zones are like, and how what their lives are like. And if you give someone an opportunity to work for $500 a week in Central Africa, they'd probably start crying, you know. So we shouldn't be entitled. We should think of it as an opportunity that we can we can figure out how to do some incredible things that people around the world just wouldn't even begin to ha- be be able to be exposed to.
Yeah, that is so true. Because I'm in real estate, so I have like a little property management thing, and a lot of times we get inquiries for a lot of our properties, and I have virtual assistants. I have some that are in the States that I pay a lot more than the ones that are out of the country, like just in the Philippines. I mean,
Sure.
these guys will work for like I mean, $6 an hour, they're ecstatic for
Yeah.
things like that. And then others, I mean, it's like $4 an hour, and they're like, I'll do anything you want. I'll work 14, 15 hours a day, whatever you need. I got. It's like it's okay. And then like around Christmas, you give them a little bonus of like $50, $100,
They're
and
grateful.
they think it's the world to them. They're like, oh man, I'm forever grateful. I can't ever repay you. And it's like it's just $50. It's just $100. We don't understand how blessed we are being in the United States, or for viewers who are in other countries that are more the wealth is much greater than some of these foreign countries that don't have the blessings that you have. That's so true,
Yeah.
man.
I remember doing pizza delivery when I graduated from college for a couple of years. It was a tough time back in '06, '07, and '08. Um, I lived at home. I was miserable with a bachelor's degree. Now, I guess where was a point that I'm trying to make. I spent less than I made, and I was miserable. Now, in hindsight, you know, I'm happy I've gotten to where I've gotten to because I've been through very emotional periods in my life. But that is what got me to where I am. I did not spend what I made. I saved, uh, and and it was painful. But that pain, doing the difficult path, allowed me to get to where I am after 15 years. And that sucked. It was very depressing back then. Strange thinking. I haven't thought about that in a while.
Yeah, I was in the same boat as well after college. Paycheck to paycheck, I was spending it all the time. Like it was just,
Mm.
and zero money management skills. And then
Mm.
during that time, I just discovered Bitcoin, and I won a simple online poker tournament. And the fastest way to get money out was Bitcoin, and
Mm.
that was back in 2015. And so I held that and I said, well, I don't know what this is, but let me just, do more research on it. And then over time, I just kept buying it and kept buying it.
Mm.
And I just got addicted. And here I am now. I'm just totally into DeFi. We have a podcast here and just would love talking about it. And, I've onboarded a bunch of people, and apparently I'm the smart guy. I don't think I am. um, so, and
You're very smart, sir.
no, it's just being lucky in the space and the passion and of having that interest. That curiosity is, people confuse that, me being smart for that curiosity. And it, I look at it a different way. And we are here, understanding this tech because it's very complex stuff.
Everyone's on
Yeah,
their own journey. That's
That's
the
exactly
biggest
right.
thing. Yeah,
Yep.
yeah.
and
It's
what
all
we're doing, and we're sharing our journeys. So everyone has to, you hear other people's stories. Here's an interesting observation. I still listen to all the macro folks, Lynn, Raul, uh, 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 even George Gammon. I like Jeff Snyder, um, and their stories ring different nowadays. There was a time when it was like I would watch their content and be like, holy fuck. But nowadays I'm like, all right, that's cool. And I probably don't even finish their entire video because I understand what they're saying and what their point is. I guess my point is that everyone's on their own path, and what you have to do is follow it, and you will become more comfortable over time, understanding the things you understanding the stories that other people tell. And the more you understand the things you do, why you do them, the things other people do, and why they do them, the more comfortable you will be engaging with other people, managing your own emotions, and hitting financial markets. It's a journey.
Yeah, that's a valid point. I think we're all on this journey, and at different stages in life, things just hit different,
Yep.
especially as you're constantly learning. I know we're starting to get close to that time. I want to connect it back into DeFi and thoughts on the market, and mainly the last one, maybe two questions I want to ask. And Abs, if you have any other questions, is how do you assess risk in the DeFi industry? What steps do you take to manage this risk?
Capital gains is a ferocious game, and I'm grateful I no longer have to do it. Now, obviously, there's plenty of folks that have made millions and they keep doing capital gains, and that's the only thing they love to do. And they'll say, dump on or be dumped on. And I appreciate that. I understand that. No longer a game I want to play. Um, and I'm fortunate to not have to. I do a different calculation, which we've discussed the vast majority of our stream today. Um, the risk is paramount, but the risk is paramount no matter how big you are. Someone is always trying to take your money from a capital gains perspective. And what does that mean? Look at the volatility of Bitcoin unto itself. And if you're looking on an hourly chart, you have no idea whether it's going to go up or down. You're literally playing PvP, player versus player, with other people trying to take other people's money. And it's just a giant mosh pit of, people trying to take each other's money. So the risk is maximum. Look at the volatility. But that's the case as well in the equities markets. Um, what the majority do is probably not the best exercise. The vast majority of people just like buy Bitcoin and they're like, oh, I hope it goes up 10,000%. To do what? To sell it. That doesn't do anything. That's the resulting cash wouldn't have any experience managing the capital, which is probably why DCAing like cash flow and just watching it grow over time probably makes more sense than even Bitcoin, which is more of an enterprise type of investment strategy, very consistent with traditional dividend investor mentality. Bitcoin's no solution. It's not even a solution to money in many regards. It's a solution to the plague of central banking because it replaces it with deterministic monetary policy, but it doesn't fix money. It's an M0 replacement. So, there's such a horrible reality that the narratives are just, I'm not fond of a lot of the prevailing narratives. And that makes it complicated for people that are just getting exposed to the crypto markets and they're seeing these narratives, which probably aren't the best narratives, in their interest. Because what folks don't even know what their interest is. They're like, I want to make money. I said that when I graduated college at the career office. They're like, what do you want to do? I want to make money.
You heard it. You heard it here. Noah says, "Buy stuff that pays you and don't leverage trade."
Well, look at, don't leverage. I would never say to do that. But look, plenty of people make money leverage trading, but it's the few. Leverage trading is the epitome of predatorial action. You're trying to take other people's money, literally borrowing money to do it.
Yeah.
I'm such an advocate of trying to find peace of mind nowadays. Like today's stream was a good one, and frankly, Mondays as well. All things considered, cool as a cucumber. Even though the world is crumbling and the banking system collapsed, and they didn't bail it out, but they bailed it out. aside from macro talk. But that's what is occurring. But then you could always say that the banking system is a giant insolvent mess, and it's supposed to collapse. And you have your doomers on Twitter. It's gonna collapse. It's supposed to collapse. Collapse is inevitable. It's all irrelevant in my mind nowadays, because all that matters is Friday. How much did you make? What could you buy? Can you pay your bills? And that is what offers peace of mind. So, that's like really, first and foremost, balance the budget. You need to spend less than you make, which means, intermittent fasting is really effective. And it doesn't mean you're starving yourself. It's actually, it's healthy to eat less calories than your body needs.
Wait,
And it
what?
happens. My point is, it's that is an effective way of reducing expenditure, eating less, and that's not a bad thing. Look, I have the capital to be obese. I choose to not eat until 6, 7, 8 o'clock at night for health reasons, and it happens to save a shitload of money. I used to work in New York City and eat breakfast. It was like $15 for an egg sandwich for breakfast, another $20 for like a burrito for lunch, and I was going to American Express down at 250 Hudson Street, and I was like 275, 280 pounds. I would have saved $900 a month if I didn't eat breakfast and lunch and I just ate dinner.
Yeah, so
I was
you're saying two things here. That what I ate this morning for and it was a donut is terrible. And then number two, we need to open a business in New York. Is that what you're saying?
It's a good observations. That both are true.
Hmm.
And what would that business be? That business will be capitalizing on folks that think breakfast is necessary. It's not biologically, calorically. A good part of what I think about is like just sustainable mental state, and the and balancing the budget is such a critical thing. Listen, someone who makes $1 million a year still has to balance a budget, and if they don't, they're insolvent at some point. So if you're making
Yeah.
50 grand a year, 30 grand a year, gotta balance the budget. It's it is always balanceable. There is always something to remove, and and this goes back to, we could conclude on like stuff that even Munger says, and you do what's necessary to survive and to grow and to prosper and to win, and it'll be painful. There's no way to avoid that. And I remember that's what I was telling you guys with the pizza delivery stuff. I was freaking depressed.
Well,
Pretty
you
miserable.
kind of already anticipated my last question. It was, what advice would you give investors looking to get involved in DeFi? Well, spend less than you earn.
Spend less
Simple as
than you
that.
earn. Another tip is there is no leaving. This is a market. This is an emerging market. You need to be financially successful, you need to engage with markets, which means you need to engage with them sustainably, which means that you guys had leverage trading. Don't leverage trade. Don't leverage
Yeah,
trade without a
I never
significant
do that.
experience. But if you have experience and you're doing ridiculous technical analysis, and sure, you can leverage trade. But if you don't have that experience, don't do it. Someone's going to take the money from you instead of you taking the money from someone else. So you need to engage with these markets.
Yeah, it
And
reminds me of that. When you speaking of leverage trading, it reminds me of the dude, Andrew Kang. I don't know if you've seen him on Twitter or not, but this guy, he like 2 weeks ago, he made a bunch with the call from Bitcoin going from like, I don't know, it was like 18 or 19 to like 25, or maybe like
oof,
3 weeks ago. But he made a bunch in that move. But now, like the past few days, he took a short position and
mm,
lost like 3 4 million of the gains that he had, just like that. And
yeah,
you can see this all happening on chain in his wallet. It's crazy.
yeah. He made a lot of money. He lost a lot of money. We don't know what his anxiety level was, how
Oh,
comfortable he is.
jeez.
It's probably all over the place, you
Definitely took a
know?
few years off his life there.
Yeah,
I
I
wouldn't
can
want
only
that for
imagine.
myself,
Yeah.
and I wouldn't want that for other people. So my advice always would be is to not even think about that kind of activity. So I know many people that make so much more money than me, be it from traditional financial enterprise or even crypto enterprise. They just are so much more wealthy. One of the hardest things to do is to get the fuck over that. There's always going to be someone making more than you doing some shit that you probably won't be comfortable doing. One of the biggest learning lessons I've had is to find your playing style and execute it religiously. I do what I do. I cannot, I'm not a trader. I'm not a capital gains trader. I can't take a half a mil and try and do a spec bet, watch it go up 5% and capitalize. I don't want to do that. I don't feel comfortable doing that. So I don't do that. Don't do that.
Good point. Abs, you got any questions for him, man? I'm all questioned out. This guy's got too much knowledge for me.
Yeah, yeah, we're definitely going to have you back in the future shows. But yeah, I mean, that's you've answered a lot of questions here. You were very informative. Your style is very unique as well. Because looking at the eggs and from a grocery, supermarket perspective, they want you to buy your dollars and with those eggs, and that's very very interesting. I never thought about that. So I guess that approach when it comes to investments, that's on another level. You're on layer 15 when we're still playing level 1.
He's the Warren
Uh,
Buffett of crypto. That was the proper introduction for him.
have your realizations. Look
Hmm.
for the things that other people don't see. Define the world. Uh, Other people look, I presented ideas of how to define the world the way I see it, and folks will hear my stories, my narratives. Some may agree, some may disagree. That's okay. But everyone has to make their definitions because what they're doing is defining rules for themselves, and they're also defining the rules of the game in their terms. And that allows a person to even start to navigate, to feel comfortable. It's kind of like the acclimation to a map. When you move to a neighborhood, you don't know the streets, you don't know where the hell you're going, and you're using navigation nowadays. Back in the days, we used MapQuest and stuff like that. Um, but the point is, there comes a point where you're like, all right, I'm going to the store. It's, you don't even think about the names of the streets. It's 5 blocks over, 10 blocks up, and you're waiting at two traffic lights, but you just know how to navigate. So that's kind of the same kind of acclimation that folks need to do with markets. Everyone needs to be able to manage capital, navigate markets. Otherwise, everyone's life reduces to trading time for money, in which case you could calculate the total amount of dollars you will make in your entire life. And that shouldn't be where anyone finds themselves.
Amen.
That's a pretty shitty equation.
It's a good equation. I think it's valid.
Yeah.
Abs, you got anything else, man? Or
No,
should we
no,
close it with our wisdom one-liner?
close it. We're ready.
Noah, dude, it was an honor to have you on here. We got to have you on again. We love your rationality as well as being the Warren Buffett of crypto. Give us some links where we can learn more about you. Where can we find you? Chill us your stuff.
Probably the most meaningful is my Twitter content. That I use Twitter as a way to vent, a journal. That's where my one-liners go. And it's my observations of, not just markets, but financials, which is broader than a specific market, but it's also just what's going on in macro and which is geopolitics and politics which respective of every country. Again, that's complicated, but there's good content on Twitter, and obviously I do my weekly streams on YouTube, and I have my own Discord. But that's the sequence: Twitter. If you have more interest in what I talk about, YouTube, and if you have more interest, there's our Discord where it's other people that have thought like me for the last couple of years, where we all congregate.
Sweet. Shoot me over those links too. I'll drop them in the description in this video. If you guys are, well, actually not if, go ahead and check out his channel, check out his information, give him a like, give him a follow. Let's go ahead and close this out with our wisdom one-liner. We're in Proverbs chapter 11, verses 4. Speaking of wealth, wealth is worthless in the day of wrath, but righteousness delivers from death. Be good, be righteous, man. All right, guys. Appreciate you having you on.
Good stuff.
Thank you.
Cheers.